Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Job Curtis, manager of the City of London Trust. Hello, Job.
Good morning.
So congratulations. We've just had an anniversary of 50 years of rising dividends for the Trust. You've contributed for a number of those years to that track record. Has it been through stock selection or has it been through that thing that's only available to Trust, which is holding a bit of cash back in good years and then deploying it in perhaps less successful years?
It's been a bit of both, Emma. I think at the core of our portfolio have been some very consistent dividend growers, such as our biggest holding, British American Tobacco, particularly in the consumer staples area. We've got in our top 10 also Unilever and Diageo and Imperial brands in that category. But certainly the investment trust structures help that we don't have to distribute all our dividends in any one year, so we can build up a revenue reserve. And in the difficult years, we've had to draw on that reserve, and that's been very helpful. So certainly the investment trust structure has been crucial, as well as the stock selection.
Because income has been challenged in recent years, hasn't it? Because certain big players, such as financials and miners, have come off the table, and indeed low growth, low income is just a feature of this sort of part in the market cycle. Yes. You have the opportunity within the trust to look outside of the FTSE 100. You have a mid-cap allocation and you also have an overseas allocation. Yes. Are you using those options more at the moment?
Yes, we've got about 21% in mid-cap and we've got about 11.5% in overseas. So they're about... The overseas is slightly higher than it has been, but the mid-cap's about where it has been for a few years. I mean, certainly within the FTSE, there's also plenty of dividend growth. I mean, there are some high-profile dividend cuts, with particularly the mining sector this year, which was hardly a surprise given where commodity prices are. But there have also been plenty of special dividends. I mean, we can think of companies such as ITV or Hiscox in Direct Line, all doing special dividends within our portfolio. And even in the banking sector, although there was a dividend cut from Barclays, Lloyds came through with a special dividend. So the bad news tends to be accentuated, as that is always the case. But there's been plenty of good news as well across the market.
You mentioned miners there perhaps as a sector that hasn't done so well. Are there other sectors that you're looking to at the moment, this point of the market sector, this market cycle rather, which are looking exciting opportunities for you?
Exciting opportunities. We're holding a pretty diverse portfolio, but we still think the house builders, that they're, from an income point of view, look pretty attractive. I think there's a lot of demand for housing in our country. I think there's a shortage of houses, and so that's a sector we hold. Taylor Wimpey, Persimmon and Berkeley Group, and they've all got long land banks, and we think that's got a lot of potential for dividends in that sector. So
despite all the bad news, you think there's every hope that it could be another 50 years of dividend growth for the City of London Trust?
Well, I very much hope so. I think given the investment trust structure and hope the markets, obviously equities can go up and down, and you can't be certain about equities. I mean, they are a volatile asset class, but we're very confident we can build on the foundations that have been laid.
Job, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.